All right. Well, good morning, everybody. It's 9 o'clock and time for another Webinar Wednesday, another exciting episode, of course, of Webinar Wednesday. Thanks so much for joining us. As always, it is a pleasure having you involved in our discussion. Today's topic is unemployment insurance, how to manage claims and how to reduce costs. And really, if you think about it, the title alone is indicative of the genuinely strategic value of truly managing your UI process. Why? Well, a little bit of a spoiler alert here, because if you do this right, you will reduce costs. And it still amazes me that we field tens of thousands of calls every year into our helpline, into our resource library. And I would say not more than really about a handful of calls that we get in every year are asking strategic questions about managing unemployment insurance claims. And it really, I'm sure all of you know this, it's not as intuitive as it may seem. And when the calls do get through, particularly to me, what I'm hearing is, how did this happen? How did we lose this claim? Why is this happening? This is not right. I don't understand this. This system is really strange. So we really are looking forward to the opportunity this morning to go through this with you and help you to maybe make a little bit more sense out of what goes on in our unemployment insurance system and how you can use this a little bit more to your advantage. Our presenter today needs no introduction to most of our members, of course. Steve Bell is the founder and owner of Employer's Edge, and he brings to the table well over 25 years of high-level experience and expertise dealing with unemployment claims. If you do the math on it, which I tried, but I really couldn't, there's somewhere between lots and many millions of dollars that Steve has saved businesses through his guidance on this topic. He's a very popular presenter for our webinars, and I know he looks forward to not just presenting to you today, but answering your questions. So please do share any of your questions, any of your thoughts, any of your concerns that you might want to get out to us. There should be the box that you typed in a little while ago. If you type your questions in there, we'll be monitoring it, and we will do our best to get to all of your questions as the program goes along. But I'm going to now turn it over to Steve Bell for unemployment insurance overview and strategies for reducing expense. Take it away, Steve.
Hey, thank you, Bill. Greatly appreciate that. And as Bill mentioned, we'd really appreciate any questions that you want to type in during the course of the presentation. Obviously, in a webinar style, everybody's going to be on mute. So it's going to be a little bit of a, from my side, a one-way conversation for a little bit. But those questions we'll get to either at the end or Bill will pop them in. If it's something that we're not going to be covering, he'll certainly pop those in during the course of the program. The program is going to cover the following 6 topics, and we'll go through kind of a little bit about unemployment financing. We'll talk a little bit about the base period and chargeability. We'll go through what is the unemployment claim process, so that you have a good idea of what that overview of the claim process is. And then we'll get into kind of some of the meat. What is the keys to success in discharge and quit claims? Remember that unemployment is the only controllable payroll tax that you have. This is an area that is a system that's designed to those who pay out the most in benefit charges pay in the most in unemployment taxes. And so that's how the system's designed. So your success in reducing those benefit charges reduces your expense. We'll then quickly talk about the unemployment hearings process and finally get to any questions that you guys may have. So that's the agenda. Should be able to knock this out in 30 to 45 minutes and we'll get you on your way. So one of the key things, let's talk about just the unemployment system in general. And it really is largely unchanged going all the way back to the Great Depression, in 1935. One of the falsehoods we always talk about that oftentimes claimants don't understand is that as they say, hey, geez, I've paid into the system my whole life, so why not collect benefits? And we know that's false because it's not the employee who's paying into this system, it is the employer that is financing the unemployment system. And really, it's still the same principle across all states in the country, and that is unemployment is provided to those who lose their job through no fault of their own. Those are those who should be able to collect unemployment benefits. If you want to translate that, the system was designed to provide bridge income during recessionary times. And obviously, recessionary cycles are a regular part of our economy. Those who get laid off, it would provide that bridge income to try to keep the wheels of the economy turning. And, aside from the large recession we had in 2008 and 2009, we really have not had that Great Depression like we had back in 1935. So overall, the system has been viewed as a success. People get laid off, they collect a little bridge income, and keep until they find that next job. Now, it's financed again by an employer tax. There's a federal and a state employer tax. And as we just said, it's financed by your claims experience. There's two ways of financing this. We're going to talk about the private employers. They are paying an experience-rated payroll tax. And by experience-rated, your benefit charges and your taxable payroll go into a formula, and that calculates your tax rates. Now, therefore, if you reduce your benefit charges, you reduce your tax rate. Now, there's an alternate financing method out there for government entities and nonprofit organizations, and we call that a direct reimbursement of benefit charges. Some people will call that self-financing. They call it, you'll hear it, reimbursable method. But in any event, those agencies, rather than paying an experience-rated payroll tax, are actually paying for the benefit charges, the actual benefit charges incurred. On a quarterly basis, you will get a bill from the state that says you paid out this much in benefit charges, and you write a check for those benefit charges, a direct reimbursement of those charges. So again, employers are paying that experience-rated payroll tax. Now, that experience-rated payroll tax is paid on a wage base, very similar to a FICA tax that you pay in payroll. And in California, since I know most of our people joining us are from California today, that wage base is still the lowest wage base in the country. It is only $7,000. So you pay that tax rate on a $7,000 taxable wage base, and that's what's going to be your how much tax you're going to pay per employee per year. Now, each state can set, the claim requirements that will include the length of employment and the reason for separation as to how you qualify for an unemployment claim. And we'll get into that a little bit later. Let's talk a little bit about the base period. One of the big frustrations employers, oftentimes have is, why am I getting an unemployment claim on someone who left my employment, 9 months ago, a year ago, or even over a year ago? And that's because the concept of unemployment is that those who are responsible to pay the benefit charges to a claimant are those people who have paid wages to that claimant during the concept of what's called the base period. Now, the base period by definition is the first 4 of the last 5 completed calendar quarters. So let's walk through that as an example. Today is May 23rd. If I file a claim today, that is going to be the filing quarter. The filing quarter is Q2. That's what we're in, Q2 of 2018. The lag quarter is Q1 of 2018. And the reason you have a lag quarter is because the payroll, the taxes that you pay, your unemployment taxes, aren't due until 30 days after the close of the quarter. So, for example, if I were filing on April 20th of Q2, we wouldn't even have the taxes paid for Q1 yet in the system. So, for Q2, if I file today, the lag quarter is Q1. The base period, the state's going to go back and say, who paid this claimant wages during the first 4 of the last 5 completed calendar quarters? And in this case, that would be the calendar year of 2017. So let's say you lost an employee. They left your employment on May 23rd of 2017. You would have paid them unemployment taxes on that employee for all of Q1 and much of Q2. You have wages in the base period. You're going to get an unemployment claim. Let's talk a little bit about that claim for the two different taxing methodologies we just talked about. If you are a private employer, you can protest what's called a base period claim. You're not the separating employer, but you are a base period employer. And so you have the ability to protest that claim. That's why you need to keep good employment records going all the way back up to 18 months, a minimum of 18 months. And you can see why you do that with this calendar that we're showing you right now. Keep those employment records to include onboarding documents such as signed policy acknowledgments and any employee consultation that you may have done in the offboarding process. Maybe you gave them some warnings about attendance or violating your policies that led to a termination. You'll want to keep that documentation going back in time 18 months. Now, unfortunately for you, governments, nonprofits, people like hospitals who might be on the line, those folks, you do not have in California base period protest rights. In other words, if you are a reimbursing employer, you can only protest that unemployment claim if you are the separating employer. So in the example I just gave of someone who separated back in Q2 of 2017, if that claim came in, unfortunately, you're on the hook for that claim, no matter the separation reason. It's not you will not be adjudicating that separation reason. So everything's controlled by the date the claim is filed, and that's kind of an explanation of the base period and why you get claims going back in time. I want to go back and just talk about the financing on the tax side, and this was a slide that we took out. But for those of you out in California, we've talked about the state unemployment tax rate. That's you get from the state of California. You also pay an annual federal unemployment tax. Now, that taxable wage base is also $7,000, just like the $7,000 state taxable wage base. It's your FUTA taxes, your federal unemployment taxes that have been going up and up and up for the last 7 years as a result of California borrowing from the federal government to pay unemployment benefits. They did this during the course of the big recession in 2008 and 2009, as did 34 other states. All states but California, as of last November, had paid off their federal loan, except for the Virgin Islands, but we probably don't have anyone on from the Virgin Islands, have paid off that loan to the feds, meaning their federal unemployment tax rate is an effective rate of 0.6% on a $7,000 taxable wage base that is only $42 per person per year. Unfortunately, in California, that is now gone all the way up to a 3% tax rate. And so now you are paying $210 in 2018, which you'll pay this in January of 2019. For 2018, that'll be $210 per employee per year that you have to pay in federal unemployment taxes. And that's because California has not yet paid off that loan. Now, they're getting very close. We hope if they get that done this year, here in 2018, your taxes due in 2019 will drop all the way back to $42 per person. So let's hope that economy stays strong and that gets paid off. All right, off we go to the next slide. Let's just talk about, what is the process of an unemployment claim? What's the life cycle of an unemployment claim? We just want to make sure everybody's clear about the different levels in unemployment. There are 3 levels to an unemployment claim. Now, when an employee separates, the state's going to look at one of 3 things. They drop things into 3 categories. The state says it's either an involuntary quit, which is an employee-initiated separation, or it was an employer-initiated separation. It's only one of the 2. There is no such thing as separation by mutual agreement. A lot of people think there is, but there's not. The state views that as the employer initiating that separation. So 2 types of employer separations. It's a discharge or a lack of work. So based on those 3 things, now we're going to get into those on the next slide a little more in depth, but that's what the state's going to decide what type of separation it was. So employee, no matter what the reason is, Just because they quit from you does not mean they don't go down and file an unemployment claim. Please don't think that because the employee quit that the state won't award them benefits, because it's up, there's some little more complicating factors. You need to be aggressive in protesting those unemployment claims. When that claim is filed with the state, if Employers Group was working your unemployment claims, they would receive that notification. But also, in the event you are receiving that claim directly, you need to then make a decision as to whether or not you wish to protest. This goes back to that concept. Did the employee lose the claim or lose their job due to no fault of their own? If it was a layoff, the state's going to rule them eligible to collect benefits. So we're going to look at you need to make that decision as to whether or not you wish to file a protest on that claim based on the separation reason. Now, at that point, the state will issue a decision. And that decision is one of two things. The employee is awarded benefits or they are denied benefits. If they're awarded benefits, the employer has lost. If they're denied benefits, the employer has won that claim. Now, you need to make either party can appeal what we call the initial level determination. They can say, look, I don't agree with what that initial level determination is. I want to tell my story at an unemployment hearing. So either party can appeal that to the state, in which case an unemployment hearing will be set. In most states, those unemployment hearings are taking place via telephone, a telephone conference call. Not so in California. While more and more in California are taking place over the phone, the vast majority of unemployment hearings in California still take place in person, where you go down to an unemployment hearing office, you sit in front of a hearing officer who, along with the claimant and the employer, you sit around the table and you conduct what's called an unemployment hearing, and you tell your story. At that point, the hearing officer will make a decision. Again, it's a win or a loss. It's they're awarded benefits or they're not awarded benefits. It's an all or nothing thing. And then actually there's a third level. Again, either party may appeal it to what's called the Board of Review. This is in most states, this Board of Review exists. And so they can appeal that to a Board of Review. Now, one thing about the Board of Review is no new evidence or testimony is allowed. It is merely a written brief that both sides provide a written brief as to why they think there was an error made at the unemployment hearing level. And then that's your final level of the unemployment claim process. All right, let's move on and talk about strategies. Now let's get into how can we impart some knowledge here to help you work those unemployment claims and save some money by being more effective in your responses back to the state. This starts with knowing the nature of the separation. So a voluntary quit, it's employee initiated. Okay, they say I'm out. A discharge is employer initiated, and the lack of work is also employer initiated. The difference between the last two, in a discharge, continuing work was available. Also, in the first case, a voluntary quit, continuing work was available. That is one of the first things that a state's going to try to establish. Was continuing work available? If not, it's a lack of work, it's employer initiated, and there is no fault on the employee's part, and they will be awarded unemployment benefits. Of course, that goes back to the reason the unemployment insurance system was founded back in 1935, temporary income for those who are laid off. It is not a welfare program for those who do not lose their job through no fault of their own. That is why it's an experience-rated payroll tax. That's why you should fight claims aggressively if they did not lose their job through no fault of their own. All right, so one of those falsehoods that we're going to now talk about is if I quit, I can't collect benefits, but if I'm fired, I can. And that is a big mistake that a lot of employers make. Let's get in and talk about the burden of proof and where that lies. How the state will adjudicate the claim is they will say the burden of proof is on the responsibility of the employer when if the employer is the moving party. when you're discharging an employee, you must show with clear and convincing evidence that the employee was discharged for misconduct. And how do you define misconduct? It's a deliberate and willful disregard for the employer's best interest. And that is that falsehood where if you are discharged, you can collect. It's a little more complicated than that. The question the state's going to ask, if you are the moving party as the employer, is was there misconduct associated with the work? Let's talk about what is how a discharge checklist can help establish misconduct. What you want to do when responding to that unemployment claim is use words and phrases that show that the claimant knew what they were doing was wrong. And that is what misconduct is that they did something that they should have known better. They should have known better. How do we establish that? Well, detail the rule or policy which was violated. Is it anything from attendance to showing up to work to a procedure that they must follow? As part of their job, maybe they got to follow a certain procedure that willfully do not follow that procedure. You need to be very specific about the final incident that caused the separation. The state will always hone in on what was the straw that broke the camel's back. They do not want a kitchen sink approach to unemployment. Do not throw at a state. A bad strategy that often happens with employers is they say, not only did they violate my policy, but they were an annoying employee. They made everybody else mad. They wouldn't show up to work, and you're complicating the separation reason. You want to be specific. It should be a single reason whenever possible. It should be a specific final incident, and that will give you more success in the world of unemployment. You want to show when there is a rule or policy violation that the claimant knew the rule. How do you do that? A signed policy handbook at the beginning of onboarding when they come to work for you is your best way to show that the claimant knew the rule. Claimant starts work with you. You say, hey, employee, here's a handbook of the rules of the road at ABC Sample Company. Read this and sign this acknowledgement that you have read this that says you will abide by our policies. That is the best way to do that. Show that the claimant was warned. The state will want to know, if at all possible, they want you to give the claimant the opportunity to cure their behavior. They want to see, unless it's something that rises to the level of immediate termination, and by the way, the state gets to decide if the separation reason, that final incident, does that rise to the level of immediate termination? If I'm working in a hospital environment and I use expired blood in a patient, that's a pretty serious violation. But if I'm a janitor cleaning toilets at night, and I don't clean the toilet quite right, I probably deserve a warning. That's probably not something that rose to the level of immediate termination. So there are obviously varying, degrees that come into these separations, but that's what the state's going to look at. So they want to see prior warnings. They want to see coachings. They want to see verbal discussions. They want to see that you made the employee aware of what the expectations were, to give them that chance, that they may have known that their job was in jeopardy and that the consequences of them continuing the behavior would be that they would be terminated. You show that to the states, you will win a discharge case. And you can win those on a regular basis if you have good HR practices, follow those HR practices, apply your rules fairly and consistently across all of your employees, and you will win discharge unemployment cases. So, what are successful discharges? You violated a known company rule. You had an absence within a claimant's control or tardiness within the claimant's control. One of the things that we'll talk about in just the next slide is a little bit more about absenteeism cases and how those are a little more challenging. Insubordination, a refusal of a direct order. Now, the state in an insubordinate case is going to try to establish, was that request a reasonable request? Was it within their job description? Was it something that an employee would be expected to do? Poor work performance, yet was capable. One of the most frustrating things about job performance is many people lose job performance claims. If there was no misconduct, if the person is simply bad at their job and is incapable of performing their job, that is viewed as a poor hiring decision by the state, and they will be awarded benefits for simple job performance. If you go to the state with a reason for separation as poor job performance, poor work performance, you are setting yourself up for failure. You will want to get more specific, the more specific you can, such as they violated this rule, they were insubordinate. Any of those things that is more specific rather than just the generic job performance will give you a better chance of winning that unemployment claim. So focus on being specific. Things such as misappropriation, mishandling of funds, merchandise, property, obviously under the influence of drugs or alcohol, violation of the policy, of your policy. That are reasons that you can have a successful discharge. Why might you not be successful in a discharge claim? We just talked about the work performance. Incapable, but not willful. A lot of times sales jobs are very tough to win those claims when you're not meeting sales performance metrics if the person never met those metrics. If they simply are incapable, those are tough ones to prove that it's willful misconduct. However, let's contrast that with someone who has a policy that says, look, in order to be a successful salesperson at ABC Company, you need to make 20 new contacts every week. You need to call on 20 new contacts. And if they're only calling on 5 new contacts a week, now they're not performing the work as designed to provide success. We would certainly take a chance and protest that job performance claim. So that's something to keep in mind as to how you frame the performance back to the state workforce agency when they're trying to decide, was it unable? You got to think in terms of can't versus won't. That's a key distinction. If they can't do it, they're going to be awarded benefits. If they won't do it, they would not be awarded benefits. Think about that in your performance cases. Attendance tardiness. This comes down to the claimant's control. One of the most frustrating things is it also intersects with the final incident. You can have an employee who's not showing up to work over and over, and they're late, their car broke down, those types of things, and yet that final reason for which you terminated them was that they were sick or that their child was sick. The state's going to say that was a reasonable reason to stay home. That was not beyond the claimant's control, or that was beyond the claimant's control. Therefore, we are going to award benefits. One of the most frustrating separations is those attendance cases. So if you have flexibility in your policy to say to a claimant who has triggered so many points or has been absent, to say, look, your next absence that is within your control will result in your termination, you will win more attendance cases rather than terminating them after a fixed point system and that last incident was beyond the claimant's control. So there's a couple tips for your attendance type cases. State's also looking for things like isolated incidents, no prior warnings. We just talked about that. Does it rise to the level of immediate separation? The state's going to reserve the right to make that judgment call. So if you fire someone with no prior warnings, be prepared to make your argument as to why that was such an egregious event to warrant an immediate termination and not have a warning. That's what the state's going to look for. Other reasons they might be awarded benefits in a discharge, that it was a good faith error. If the employee tells a great story that they had the employer's best interest at heart, yes, I didn't didn't show up to work, but gosh, it's because I was out doing something else for my employer. I can't think of an example off the top of my head, but the state will take those into consideration. Final reason, of course, layoff, lack of work. Why the system was designed back in the first place. That's why they're allowed. All right, quit. So, did you have something there, Bill?
Steve, yeah, we do have a couple of questions that are coming in. I think a lot of them relate to what you were just discussing, too. One of the questions that we got has to do with leaving the company because of moving. And this is a question we get quite a bit over here, too. It can be because the individual themselves has to move or a family member has to move. Could you talk a little bit about how that plays into unemployment?
Yeah, that's going to be a state-by-state thing. Different states will adjudicate those types of claims differently. And so, for example, many states will, if you are quitting to accompany a military spouse who has been transferred, then they will award benefits. Some states will allow for a win-win. And by a win-win, that means they will pay benefits, but they will not charge the employer for that specific move. So now, a quit to move, as it really comes down to the reasons behind that move. We encourage our customers to always protest those claims, unless it is something that the employer doesn't want to protest, if it was a quit to accompany a military spouse. But, the employee must show when they quit to move that it was a serious and compelling reason. California is one of those states who will oftentimes say, hey, I realize this was a voluntary quit, but it was for a compelling reason, and therefore they will award benefits. And actually, California will charge the employer those benefits. So they reserve the right to make that. So that's one of those things you just need to. But a general quit to move, if I'm just, hey, I want to go live somewhere else with no compelling reason, then that is not going to be awarded benefits.
So if it's a non-military related situation and it's a spouse, a boyfriend, something like that, is there something we would typically expect in a case like that?
Most of the time you would expect to win those, yeah. If you have to move back to care for an elderly parent with cancer, sometimes we've seen the state award benefits and something along those lines. But a general quit to accompany a spouse who is being transferred is not generally a compelling reason if you're not a military spouse.
Thanks, Steve. And one other question that came in, and this is something that we hear so much of for a lot of different reasons, performance. Can you talk a little bit about performance appraisals and how they come into play in hearings and in the evidence that might be presented? And the reason I mention this, and I'm sure everybody that's attending today has dealt with this situation at one time or another, you have an employee, you're getting ready to terminate them because of performance, and then you go into their file and you find all their performance appraisals are glowing, and this is a great employee, and it's a human being. Yeah. We hear that story every day. So any advice, guidance, insights on that relative to unemployment?
Yeah, if you're going to just call it general work performance, in order to win that case, you got to show two things. It doesn't necessarily hurt to say, hey, this person was getting good performance reviews, but look at where they have been lately. In other words, they were capable of performing this job and actually performed this job to a satisfactory level for a long period of time. But now we can demonstrate that they're not performing this job to a satisfactory level. But you need to be specific. In other words, they're making errors. They're not processing as many. If I'm an accounting person, I'm making errors in my job now that I wasn't making a year ago. I'm not taking care of my customers if I'm an account management type position. My bedside manner for a nurse has changed. I'm now getting more complaints than I used to have. What's important is you need to show change. You need to show that something is different and that performance, the more specific you can get, you must get specific to appease the state and show that, hey, they're capable of performing. Something in their life has changed. We don't know what it is. We don't want to get into it. That's not relevant. But all we can say is the performance is not where it used to be. And here is specifically what we are seeing where it's not where it used to be. To the extent that you can get specific, you'll have a better chance of winning that claim. If you say generic, and they have nothing but glowing reviews in their file, the state's going to look suspiciously on that.
I think that also goes back to just a standard supervisory training issue. Just make sure your supervisors understand the importance of those performance appraisals too, and what's written on them, and that they are accurate. Another question, Steve, you're talking a little bit about the separation paperwork too, which I would imagine does come into play as part of the claim. When you talk about how that's defined, when you talk about the reason for separation, could you give us a little bit more insight on that? Is there something generic that you would recommend, or should it be case specific? You mentioned misconduct as a suggestion to put in that, but how specific do we really want to be when we write that into the separation paperwork?
You need to be beyond this. These are your top three categories here. These are the only three categories. Your first three categories should be these three. What was it? Was it a voluntary quit, a discharge, or a lack of work? I mean, we always recommend using a separation notice or a termination form. Everybody who parts ways with you should have a termination form or a separation notice, whatever you want to call it, in their file, documenting the reason that employee is no longer here. It should start with one of these three categories. What was it? But this is not enough. It must go a level deeper. It must go to say, what was the specific reason for the discharge? Was it a violation of company policy rule? Was it insubordination? Was it an attendance-related discharge? Was it because they violated our cash management policies? Those types of things. The states, we need to adjudicate the claim at the specific reason. Same thing for voluntary quits. They want to know if they just abandoned their job. Now, if it was a job abandonment, you should always log, what your policy is. In other words, we have a 2-day no-call, no-show policy, a 3-day no-call, no-show policy. And you should log what were those 3 days that they no-called or no-showed. Having that information on the termination form will help you in the unemployment process. You need to be specific as to what was the exact reason for that separation. And then you should certainly include in that file any disciplinary or consultation documents that you might have. So that is the key thing in a separation. So yes, always have the paperwork, whether it's electronic, if you're doing electronic documentation nowadays, or if it's physically on paper, but you should have that's those supporting documents there. What are good reasons that they might get benefits for a quit? Substantial drop in wages. You cut their pay. Change in job duties. You've asked them to do something new. They were in account management. Now you're asking them to do sales, and they're just not good at sales. Illness or injury, that's doctor recommended. So there used to be have a job that they had to crawl around up in the attic to do if you're work for a bug control company or a pest control company, and you have to crawl in the attic, and you can't do that anymore. That's another potentially good reason. Now, only in a couple states that will allow benefits for other employment that fell through. Most states don't allow for that. Or no job was available after an approved leave of absence. They come back from the leave of absence, no jobs available. That's an acceptable job for reason for quitting. Now, why would you be denied benefits? Most voluntary quits, you should be winning. You should be winning 90% of your voluntary quit unemployment claims. Simple dissatisfaction with your job or your supervisor is not a good reason for quitting. Neither is the fact that you're looking for other work or that you choose to stay home with your family. Obviously, job abandonment. Any sort of personal reasons, is not a good cause for quitting. So you need to be prepared to demonstrate in a voluntary quit, what is the state going to be looking for in any separation? They want to know, is the employer the good guy or a bad guy in the narrative, when they're summarizing the termination. As you're framing your response to the state, in a voluntary quit, you would like to show that, hey, you did what you could to accommodate this person. You did what you tried to make it right for them. They quit. Same thing goes for a termination. If you can show that as the employer, you did everything you could to preserve employment of this individual, but because of their behavior, you were forced to terminate them, that it was not your first choice to terminate, but unfortunately, because of this behavior, termination was necessary. What the employee was doing was not in the best interest of the employer and was, in fact, causing the employer harm. The state's going to want to see that you treated that employee, with great respect, like you would your father, your mother, your sibling. If you show that you treated them with respect and you did what you could to preserve the employment relationship, but unfortunately, it was something that came to a level that it was hurting the business. When it all comes back to its impact on the business, remove from the unemployment claim any sort of personal issues, either between the employee. Never make it personal. If you keep it professional, you will win more unemployment claims. So think about those strategies when you're writing up your responses. Okay. Couple things, a couple more strategies when we're talking about the context of a job separation. The adjudicators, the fact finders, don't tell them, hey, the job that they signed up for was an at-will job. That just tells them you fired them for no reason. So no good reason. So always avoid things along those lines. It's also good to show that given the costs associated with hiring, it's not in the employer's best interest to fire someone for no reason at all. In other words, you do this reluctantly. You do this because it's going to cost you more to replace that employee. You would much rather fix a broken employee than go through the expense of hiring a new one. And to the extent that you can show that you did what you could to fix that broken employee prior to letting them go, you will have more success. And just obviously employers who don't have a good reason to fire someone, they invite that speculation. And, and the fact finders kind of conclude, hey, there's something more going on here than what meets the eye. So consider that when doing that. When we're getting towards the end, quick topics about unemployment hearings. If you get to an unemployment hearing, just remember a couple key strategies for that unemployment hearing. You want to be prepared with the person with the firsthand knowledge of the separation. You do not want to send a corporate HR person or someone in HR who was not involved with the separation. That is considered hearsay. That is not direct testimony. And that is not what the states want, and that you'll be kind of written off. So you will get a file. Make sure that every hearing, when you have a state hearing, they're going to send you a file of what information the claimant has provided and what information you provided as the employer at the initial level. Make sure you have that complete file so that you can review what the claimant has provided to back up their case for winning that claim. So important thing. A couple more things about an unemployment hearing. Just you got to be ready with some basic information such as dates of employment, rate of pay, job description, the days and hours worked. These are things that are important things. Now, In a voluntary quit, boy, if you have a signed resignation, that's very, very helpful. In the discharges, make sure you have your documentation, those written warnings. Be familiar with those. Most often, those should have been provided at the initial claim level. States get very frustrated when you produce a number of documentation or written warnings at the hearing level that you did not give them at the initial claim level. Make sure that you provide all the information at the initial claim level. Therefore, you're not providing new information at the hearing. That is something that's very frustrating. And if you do, be prepared to testify to why you did not provide that at the initial claim level. That's an important thing. And again, remember, unemployment hinges on the final incident. Focus and have a specific final incident. What was the straw that broke the camel's back? What was it that led to that specific termination? Okay, that's the couple more things on just unemployment, our second to last slide here. Good hiring practices and reducing turnover. That obviously reduces unemployment claims. Job evaluations on a regular basis. Tell your employees where they stand. If it's not working out, let them know. Again, that comes back to that. If you're releasing someone with no prior warnings, the state's going to say, did you have a good reason for doing that? If you use probationary periods, not that you can get relief of charges for a probationary period, but if you have a probationary period, you will minimize your charges. If you go back to that base period slide, if you get rid of someone within the first 90 days or 60 days, they may be eligible for unemployment because they simply did not have the talent to do your job. But the cost of that unemployment claim, you may not even have wages in the base period when they file for unemployment. So you're going to really minimize your exposure. We encourage our employers, make the decision as to whether this is a good employee fast. The state really struggles with a job performance claim if they've been working for you for 2 years. They're going to say, well, what were they doing for the first 2 years? It must have been satisfactory performance for a while. So use those probationary periods to focus you as the employer on making that decision quickly. Work rules, handbooks, get those signed acknowledgments. Show that they knew the rules of the road. Conduct exit interviews. Obtain those resignation letters. Document your warnings and coachings. Just even if it's verbal, make sure you document that, hey, I verbally spoke to Steve on this day, and this is what we talked about. That pulls weight. That's important because the state will ask Steve, hey, did they talk to you about this? And then, the person is under oath. Hopefully they won't lie about that. Report job refusals, those types of things. And again, protest your unemployment claims. If they did not lose their job through no fault of their own, then they are not eligible. If you're using Employers Group Today for your unemployment claims processing, this is our team. This is the team of folks. Dawn is handling your claims at the initial level. If you've been with us a long time and you know who Stephanie Hernandez is, she's been handling Employers Group claims for many, many years, probably over almost a decade now. And so she's been involved in your claims. She manages the Employers Group team of folks. And then Jen Venable, you'll be hearing from her every time we get an unemployment hearing. She's working with you on those hearings when we're representing you at an unemployment hearing. So the resource library, and Bill, I don't know if you wanted to come over here and talk about this slide at all.
Well, I think most of our participants today know the team here, our helpline, which is always available. And one of the things I always recommend, and a lot of you have probably heard me say this at one time or another too, is whenever there is a separation, somebody walks in and says, hey, this is my 2-week notice, or you decide it's time for somebody to be separated from our company, this is a good time to reach out to our helpline for all of our members and talk about it and go through your checklist, but also talk about the unemployment consequences of this. It is really one of the areas that we forget about way too often, and we do want to talk to you about that. I think most of you know Robert in our resource library. Robert has great data for you, information and background and articles on it. And if you do have questions and want to talk about any strategies relative to outsourcing it, to getting the support from Employers Group, from Steve and his team, you can always reach out to me directly. We definitely want to make sure we're helping you in any way that we can on this. Steve, we do have a couple other questions that I want to run past you, and I think we got a couple of really good ones here too. And a lot of it has to do with some of the strategy situations. Do you have any comments or thoughts when you're either at the initial protest level or at the hearing level? Does it pay off to compare employees to say, we've got 5 people in this department, this is the only person who absolutely could not do the work, or we've always fired employees who get to this level? Is that going to help us at all in our UI claims?
Yeah, it's certainly worth a try, absolutely, and to show that this is a reasonable standard. So you want to address it as a reasonable standard for this job, and that you want to say that people of reasonable competence, are able to perform this job at this reasonable standard. And yes, we have 5 other people who are doing this job to this, acceptable at this level. And you can certainly use that as a comparative. Now, the question the state's going to ask is, was this employee ever able to do this job to this level? And that may say, you may say, hey, no, they weren't, because we expect them to progress to this level as everybody else has progressed to this level. But for these reasons, or for reasons unknown, this employee is not progressing to this level. And the state's going to have to make this judgment call as to whether it's a lack of talent issue or whether it's a willful misconduct issue. Your goal is to try to show this is not a lack of talent issue. This employee seems to have every bit of talent that everybody else in this department has that is performing the job at an acceptable level. This employee, for whatever reason, has chosen not to perform the job at that level. That's kind of the verbiage that you want to use from a strategy standpoint.
Actually, and that's great, because it ties really well into our next question. And this actually comes from a case study. This is a particular situation that one of our members is dealing with. And when we talk about the final incident, so you've documented that the person is not meeting productivity, they have goals, they're not meeting them, and you've done that over a period of time, over a number of months. How do you separate out that final incident? And this is an actual scenario we're dealing with here, where the employer lost at the initial level and is appealing this. So is there any particular verbiage that you would recommend when you're talking about the final incident relative to productivity?
Well, yeah, final incidents relative to productivity goals, sales goals, metrics that are what I would say not hard and fast. In other words, attendance is a very simple thing. They were there or they weren't. Sales goals and productivity goals are ones that, the state's going to try to determine, is this a lack of talent issue or is this a misconduct issue? Is it something that the employee, and just so you know, when it simply comes down to productivity goal or a sales goal, those are hard claims to win, because showing misconduct, showing that it's within the employee's control, that they have the ability to meet those productivity goals, is a hard thing to do. That's the most challenging thing to do. And that's what we have to do to win the unemployment claim, to show that, hey, this is a reasonable thing to do. The more complex the job, the harder it is to show that. In other words, the more complex the sales or the productivity, I'll just say it this way. If I'm a janitorial company, or if I'm working down at the In-N-Out burger, and I need to throw so many potatoes through the potato slicer, per hour in order to, keep the fries, cooking. And I'm not willing to throw those potatoes through the slicer. The state's going to say that's not a real taxing job. That productivity goal is reasonable and should be achievable, versus someone who's trying to, do something that's more complex, again, those typically tend to be sales objective related. If I'm in a sales world where I'm trying to sell and close business, those are harder to win.
And also, isn't it accurate to say that too much of a good thing is too much when it comes to warnings and probationary periods? If you do it over too long a period of time, too many times, does that sometimes mute the impact of those warnings when it comes to UI claims?
Certainly, if you take a long time to actually release them for a given warning, if the time between the corrective action and the time of the separation is, yes, it can definitely work to your disadvantage. The state's going to want to see that you're timely and that you're moving on the separation. If not, you're accepting the poor behavior, and that poor behavior is acceptable to you because you continue to employ them.
Great. And just a couple more questions, Steve, and really appreciate everybody's participation in this. This is fantastic. When it comes to attendance, and this is an issue we deal with a lot over here too, how, if an organization has a points system that says, each unexcused absence is this many points, that many points, and then when you exceed that number of absences, or when you exceed a certain number of points, you will be terminated. How does that play into UI policies, and would in general? And then the other part of the question has to do with if the last incident involves illness of the person or a family member, is that a good idea to separate them at that point? And I would actually, on that last point, I'd say that's something you got to be really, really careful of. And it's not just a UI question. That's going to tie into your sick leave policy and other leave policies that you might have at your organization. So that's something that might be a little bit different from UI. But Steve, if you could address the attendance points system question.
Yeah. So a point system in general does not work well with the unemployment world for the reason you just mentioned, and that is the trigger point could be a reason, an attendance issue that was no fault of the employee. Thus, the final incident was not their fault. Thus, they're awarded benefits. It's a tough balancing act between consistent application of a policy and the flexibility to use and have a reasonable attendance policy that is beneficial to UI. So to the extent an organization is comfortable with this, we encourage an attendance policy, if you're going to have something that's points-based or count-based, that once you exceed that points, future attendance violations are subject to termination at this point level, that you give them a warning telling them that. And then we encourage you, to the extent that you can, you got to make reasonable judgments as to the next. Usually if you got a bad employee, they're going to not show up to work. But if, to the extent that you can make that not showing up to work within the control of the employee, which are things like transportation issues, right, versus a sickness, you're going to have a better chance of winning that claim. But some employers say, nope, to make sure I'm consistently applying it fairly, then 10's 10. Once I hit 10 points, they're out. I don't care what the reason is. That's fine as a policy. You can certainly do that and release that person. You just will have less success in the unemployment claim world.
And this is an area, of course, that we deal with on our helpline a ton. And there's the UI component of it, but there also is the general compliance aspect to it as well. So when we look at excessive absences as a reason for separation, we obviously have to be really careful. And Steve, one of the things that comes up for our helpline quite a bit is somebody's constantly absent because of childcare issues, for example. And we do have to guide sometimes, and obviously it's a case-by-case situation, when is too much too much? When is enough too much?
Yeah,
from a
and
my perspective,
that's a good. Go ahead.
No, I was just, from a UI perspective, is that something that you see come up from time to time? Hey, this person was absent, 3 times a month for the last years because of the
and just so you know, right, childcare is deemed to be a controllable factor for the employee. Sickness is not. Transportation is a controllable factor. My car broke down is not a good reason. And childcare is the same thing. You're responsible to arrange for proper childcare. So that's part of being eligible to be employed, is that you have the ability to secure childcare, that you have the ability to secure transportation to and from work. Those are things that are within your control. So sickness is not.
Fantastic. Yeah, and it blends into a lot of other policies as well, and UI being an important part of that. So we do always want to make sure that we're providing our guidance on all of that when those questions come up. And I will, Steve, you mentioned one thing, and I'll always point back to this, is make sure your employee handbook is up to date, and that you are really comfortable with your policies that address reasons for absences. Your absenteeism policy, as well as your leave policies and your paid sick leave and personal leaves and time off for school-related activities. The one last area, Steve, and then I think we're right on time, which is fantastic. Could you just tell us a little bit more again about that base period and for a regular for-profit employer? When that base period actually comes in, and is there any kind of a probationary period? Is there any dark period where we don't have to worry about it? If we fire somebody after 3 weeks of work, what might our liability be from a UI perspective?
Yeah, I'm going to try to just roll back real quickly to that slide to answer that. But yes, why you do a probationary period is, let's say they leave it today and file a claim today, and that they just started work for you on let's say January 3rd. In other words, they started work on January 3rd. They've been working for us for now 4 months, and or almost 5 months, and they've now quit. And so, or you fire them. They go down to the unemployment office, and the state's going to say, who paid them wages during the base period? The answer is not you. This is why you have a 90-day probationary period, because many times you're not even going to have wages in the base period when they file that unemployment claim. It's going to be all the other employers who are going to be on the hook, whoever they worked for during 2017. But if they only worked for you during this short period of time, that's why, yes, a probationary period is effective and reducing your unemployment liability. Now, they could requalify for unemployment a year from now, and now this Q1 is in the base period. So don't get me wrong, you could get a claim in the future, but hopefully they get a job and they don't, file that claim in the future. But that's why it just, in any event, the amount of wages that you have are minimized, and your exposure from a financial standpoint is minimized. Does that help?
Yeah, thank you very much, Steve. And we can follow up on some of the particular situations, the specific incidences. We do have a couple of good questions on that, and I'll make sure we follow up individually in some of those, because they might require some back and forth in terms of questions and answers to make sure we're providing the right guidance. But just as we finish today, I want to make sure everybody has access to the SHRM and the HRCI credit that you can see right there. Want to remind everybody, and Steve showed the phone numbers and the contact information before. In general, reach out to us at, you just call 800-748-8484, and we will get you in touch with the appropriate person, whether it's our helpline, whether it's one of our subject matter experts, whatever the issue might be. We're here to help you. And in closing, I just want to really, really thank you, Steve, for a wonderful presentation, and thank you to everybody that participated